Hello traders, Gary Wagner here. It is 12 noon in Honolulu, 6 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. The 19th day of July, 2024, and this is the evening report for gold and silver, our weekend review. An exceedingly volatile week for gold and gold futures, with Wednesday's high breaking the all-time record high, coming in at $2,488.40 before closing moderately lower. What would follow would be a lower low and a lower high yesterday, and a dramatic $57 price decline today, taking August gold below $2,400 to $2,399.10. This morning we did send out a trade alert referencing the August futures contract of gold to place a GTC good till canceled buy limit order at $2,393 and place a good till canceled stop at $2,379. However, gold did not decline to $2,393, trading to an intraday low today of $2,395.70. So we sent out another trade alert just prior to the close, recommending that you cancel the limit order as well as the stop to avoid any unnecessary risk in case gold continues to decline and gap substantially lower on the open on Monday, effectively filling us below our stop price. Silver also had a deep price decline, giving up just over 3%, 92.5 cents, to take the most active July contract to $29.30. While the vast majority of the price declines in gold and silver were the direct result of profit taking, with market participants actively selling both precious metals, dollar strength was a component, with the dollar gaining 0.16%, taking the index to 104.346. Considering that on Wednesday, gold not only traded to the all-time record highest value of $24.88, it also marked the first time gold would close below its opening price in the last 6 consecutive trading days. By the time the dust settled at the conclusion of today's session, gold retraced by almost 50% of the $188 gain that took 13 days to achieve in only 3 days. The question now becomes, will gold continue its price decline on Monday, or will it find support at its current level just below $2,400 per ounce? If in fact gold continues to trade under pressure, there are 2 key price points we would want to be aware of. The first one is $2,376. It corresponds to the simple 50-day moving average as well as the 61.8% Fibonacci retracement. If gold continues to trade under pressure next week, I would be extremely surprised if it broke below $2,375, and also believe that there is a decent probability that the lows that came in today could become technical support rather than a level of major resistance. This next chart is also a daily candlestick chart of gold futures that contains our recently revised upward target for gold prices by the end of this year or the conclusion of the first quarter of 2025. The first thing I draw your attention to is that we have had 2 occurrences of a correction unfolding as a descending top flat bottom, the first one beginning in mid-December and the most recent one beginning during the first part of May. I believe that both of these corrections, when concluded, signaled the beginning of a major surge to new all-time record closing prices, which is where we are currently at. Next week, once we have confirmation that the correction has concluded, we will update our model to include gold breaking and closing above $2,500 for the first time. This has been Gary Wagner wishing you, as always, good trading. We will talk to you after the weekend for the next daily update and evening report. Bye-bye.